Well, hello everyone, and thank you for joining us today to talk about an important topic of ESG. ESG, for those who are not familiar with the term, stands for environmental, social, and governance. And it's a topic that's really acquired pace in recent years and will continue to do so in the years to come as we move from seeing ESG as merely a nice to have to a must have. So without further ado, let's start with a quick fire round of introductions. I'll start off with myself. My name's Louis. Hello, everyone. I'm an investor with InMotion Ventures in London. We're the venture arm of Jaguar Land Rover, and we invest globally, seed to Series B, across a number of verticals, including electrification and sustainability. Over to you, Chris.
Sure. I'm Chris Thomas. I'm a co-founder and partner with Assembly Ventures. We're the first transatlantic mobility fund in the world. So we invest in air, land, sea, and space in Detroit, Berlin, and Silicon Valley, but across the entire West. The fund's premised on two ideas. One, that the East and West are bifurcating. So we're going to have very different environments as it relates to logistics, supply chain, and manufacturing. And two, the industrial centers of the legacy West have a huge role to play in the future of the way the world moves.
Fantastic. Manuel?
Thank you. Hi, good morning. I'm Manuel Barreiro. I'm the founder and chairman of the Aston Group. We are a private equity firm that do business in North America and Europe. We have a lot of different investments, but we do a lot of real estate. We do clean energy and telecommunications and technology.
Fantastic. Well, let's jump straight into things. So, what does ESG mean to you, and why do you think business leaders, investors, decision makers have started to adopt ESG principles?
There are many different ways to describe ESG, but usually the simplest way to describe it is the better. So for me, it's like everything that sounds good, or todo lo que suena bien for the Spanish speakers. And basically, it's just be committed to try to do things as sustainable, to be good to community, to be able to be transparent. So if anybody is looking at what you're doing, whether they're investors or stakeholders, or just even your employees, that they can see and everything is transparent and open for everyone. So the better that you can do that and the better that you can contribute to society, it's usually good. And also a lot of the young generations are really looking into this so that when they're looking for a job, they're not looking now just as how much more they're going to be making, but really what's the impact of what they're going to be doing in the society.
And I would agree with all that. I think one important additional point, though, is that to be sustainable, you have to be profitable. And there's a lot of discussions right now as to how can we do remarkable things that are going to improve the world and the environment we live in. All of us in this room today, I'm sure, want completely and clean energy. But we must transition to that world by utilizing what we have today and genuinely having a real impact rather than greenwashing or something that takes away from what you're hoping to get to.
Completely. No, I would agree with that. I think adopting ESG principles doesn't have to result in a lower market return.
No.
It can generate actually quite significant market returns and actually lead to reduced operational risk, increased productivity in manufacturing, and we're seeing that in mobility quite a lot in sustainable design, modular design,
Absolutely.
And also circularity. So no, very good point.
And as recently as 10 years ago, sustainability and profitability were mutually exclusive. And to your point, they're very much now, or can be, one and the same. Yeah.
Fantastic. Okay, and what do you think the difficulties are for startups as opposed to large corporations in adhering to ESG standards?
I think from our perspective, as I talked about earlier, we have to be sustainable is to be forward-going and profitable. And so when it comes to startups for us, we see a lot of funds that are marketing sustainability but aren't actually achieving it. So the companies that we've invested in around the globe, companies like Sortira Alloys that take end-of-life materials to ensure that you can take aluminum from recycled vehicles, put it right back into production. On average, you utilize about 5% of carbon input by recycling aluminum rather than mining new. That's real impact. Thinking about all the ways in which you're doing this in a material, quantifiable way, rather than just kind of having a talking point. I think that's what's really important. If you're going to be a fund or a company that claims to be, ESG focused or sustainability and have impact, you have to actually have those real results.
Yeah, I think what's really changing nowadays is that before people were looking into ESGs just because they were accountable for something that happened.
Yeah.
Nowadays, it's really, that they are actually measuring how this happens. A good example, we invest a lot on the auto industry, and companies or OEMs in Europe and Germany are really pushing down the supply chain on this and saying, well, let's if you want to keep selling product to me, let's go down the supply chain again and say you need to have at least 30 or 40% of your energy coming from clean sources. If that doesn't happen, then you're not allowed to sell me this product. So I think that's a really, really big change because before it was just about putting something in paper, putting something in your audits, and now it's really going down and really pushing everybody to be part of this and to improving the whole society. And I think that's important, and being able to measure that, it's something that wasn't there 20 years ago when this concept came in.
Fantastic. And I think that brings us on to the next question really well in terms of being able to quantify ESG metrics and what the difference is from CSR, corporate social responsibility, in the past. What would you say are the main differences over those two approaches?
I mean, I think CSR, it's interesting. Sustainability and ESG is really focused on impact, and there's, as to your point out, you can be very profitable and have tremendous impact, second and third order effects. CSR is really focused on, are you being true to the intent of your shareholders? And can you do this in a way in which is ensuring the profit motive is being adhered to, but also that you're doing things by way of what that shareholder base wants. I think those things go together really well, but there is a clear difference I would offer between the two.
Yeah, I would disagree a bit. I mean, I think there's a difference, of course, but I think what happens, the main difference was that before it was a requirement, and today is something that you're looking for. And when you're looking for new investors that are really looking long term and are a little more willing to provide money, sometimes even at a lesser return, just because you're more sustainable and more friendly and more open, I think that's a bit different. Now that you can actually measure that, and investors might select company A versus B because you're really working into those things.
And that's a fair point, but I think that is the difference.
Yeah.
It's a question of where are you going to see financial flow of funds, and what are the underlying philosophies that are having you invest there,
I agree.
with it be with a fund or in the public markets. I think that's a fair point.
And also long-term investment.
Yeah.
Some people will say, well, I just want to go in and out and make a buck, while the other is, I want to stay with these guys because they're going to be there for a longer time, and they will last longer just because they're doing things properly. Yeah.
Brilliant. And from your experience, one for you, Manuel, how important is the role of large corporations in applying downward pressure in getting their supply chain to adhere to ESG standards?
A lot more nowadays, especially I would say here in Europe. You see it a lot more than what you see in the US. I think especially when you talk about sustainability and green, it's more and more pushy. I will say in Northern Europe more than in the US. But yeah, they're really pushing, and I think that's the catch. Everybody wants to buy now an electric vehicle, for example. But a lot of the batteries, might be made or transformed in China in not so many really clean processes, and that's the catch. So being able to actually track down everything in the supply chain, whether that's in China or in Latin America or in Africa, that's a challenge, and it's happening more and more. And I would say a little more in Europe rather than the US, but everybody's going into that direction.
And I think you're having it, I agree with you. I think you're having it from both perspectives. The IRA in the US from a governmental industrial policy perspective has certainly ensured that large corporations are saying these are the things we require downstream. But you're also seeing a lot of really interesting innovation that are taking advantage of what they know is required upstream. Mm-hmm. So one of our portfolio companies, Our Next Energy, this is looking at LFP battery pack and cell manufacturing in North America. And you look at the production requirements now as to where that's going on the continent, but also around the Western world. That's incredibly important. But also the national security prerogatives as it relates to how do we ensure that we've got a line of sight from a supply chain perspective on the critical materials and the overall manufacturing components that we're going to need to ensure that our domestic industries are vibrant. You know, the new battery plant in the UK, the battery plants we're seeing in Michigan, those things are very much, I think, in the vanguard of how we're going to see this, the big companies going down and the young dynamic companies supplying up, and hopefully seeing a lot of, you know, combinations and working together.
Fantastic. Yeah, I think you're seeing a lot of that. Startups where their business model is optimized to help companies achieve their net zero goals, sustainability goals, and adhere to these ESG standards. Are there any examples, Manuel, you've seen of startup innovators who are helping corporations to achieve these goals?
Yeah, I mean, I think there are plenty, especially, for example, in the construction industry, they're now looking into passports, like what sort of materials are you putting on each building? If you eventually want to refurbish that property, especially on real estate, you know exactly what is on this property, and instead of just, you know, demolishing something, you will just retake the materials and let's, you know, reuse it somewhere else. And I think that's a really, really big change that's happening. You know, I think one of the leading countries on this is the Netherlands. Holland, Amsterdam really is really working into this and on this circular economy, and I think that's going to be a you know, huge difference in the years to come.
And we have a big thesis at our fund around the future of infrastructure. So digital and physical and how that moves forward. One of our companies, Metropolis, they have 3.3 million users in North America, more than, you know, almost 2% of the US driving population. But how do you, from a top of wallet perspective, make sure for parking, car wash, fueling, charging, infrastructure, how do you make that experience and the time saved for the user immediate?
Yeah.
And then how does that flow up to large infrastructure providers, of which Spain, you know, has many, that is going to be really interesting around, you know, again, that large company and small company coming together to provide a better service in the built environment.
Absolutely. And interesting you mentioned the construction passport. There's a similar thing, as you'll know, in the automotive industry about battery passports.
Yeah.
And we've got a company in our portfolio called Circular, and essentially they enable large automakers to track the provenance, production flow, and greenhouse gas emissions of critical materials that go into batteries, such as nickel, cobalt, lithium. And that's becoming critical, developing these digital battery passports, so you've got complete visibility through to the production stage all the way through to end of life.
Yeah.
And that is critical. And regulations also coming in, the EU's new battery regulation, they're actually requiring companies to adhere to strict ESG criteria, and this will become more and more stringent in the years to come. And we're seeing thresholds on the amount of recycled raw material that has to go into these batteries, along with other matters. So no, it's an amazing area.
And the EU data regime is fascinating, especially for an American. I mean, I think we have a company in Berlin called Rides that allows for large enterprise, you know, large companies to provide a mobility benefit to all their employees. Yes, they get the ability to utilize any mode that they want, you know, train, bike, car, what have you. Usually it's binary, a bus pass or a car. But the real value is the data. So if I know you working for Siemens, and I know exactly what you're doing every day, understanding what those customers are, or what those employees are doing, how can you actually better utilize your transportation systems, the cost savings to the large corporation and the benefit in terms of just better carbon mitigation, that would only happen in Europe right now because of the regulatory regime.
And you mentioned data. Where does cybersecurity come into the ESG topic?
I think it's so important, and I've spent a lot of time, I sat on the board of an Israeli cybersecurity company focused uniquely on automotive, and I've been looking at the space for a decade. I think it's a space that was a little in front of its skis. It was a little too early because there wasn't a customer in the eyes of the OEM. But today it's not a nice to have, it's a must have, as we've seen, you know, in the Hyundai and Kia, you know, kind of propagation of different vehicles being stolen because of like a lack of cybersecurity or a lack of security protocols. This will be something that'll be a core part of any forward-going make model, I think, you know, starting as recently as next year. I'm a big believer that it has to be there. Yeah.
Absolutely.
No, I mean, I fully agree. Just, you know, think about, for example, data centers. You know, they storage all the data for basically anything in the world, from, you know, from gaming to what we buy, what, you know, we store. And they really need to manage this information. And going back to ESGs, now sometimes this data could be more valuable than the actual product that you're building. So it's extremely important to keep it safe. So cybersecurity is a huge, you know, a huge deal now, and it will become more and more every day now that everybody's working or interacting with each other. All the young generations, playing in here. The metaverse that everybody will be immersed into that in many years. A lot of people think this is the future, but it's actually happening now. In the next few years, it's going to be there, and a lot of the young generations will basically have, let's say, a double life. What we have in here, and then what you will have online. And if we do not protect that, there's a lot of risks on what's going to happen for our children, and I think that's super important.
Yeah.
And on that topic, what do you feel is a bigger pool? Customer demand, changing customer preferences towards a more sustainable future, or regulation, sort of coming top down in getting companies to adopt these ESG standards?
I was just talking last night with a reporter from Bloomberg on this topic, and we were talking about when you look at the past for battery production going into EVs of the last 20 years, for example, the contention that was being made on the call was, if we just had better regulatory environments, we would have had the Nissan Leaf succeed. I disagree. I think that we have to have outstanding products. Every consumer in this audience has to have full confidence that it's a great product with incredible battery life, with an unbelievable experience. That's why you're going to choose to marshal 20, 30, 40, 50,000 euro to purchase that asset. And so we certainly have to have great products, regulatory environments, and government working to ensure that we're doing right by the progression of different technologies is a good thing. But I don't think we can have any regulatory regime without outstanding products and technology.
Yeah, I think it's a dual effort, really. Of course, companies need to be thinking about this, but also the governments. Each government needs to really be thinking, because you cannot be alone. If you just try to do it from the private sector and the government is not helping, it's not going to work. And if you're just the government and the companies are not willing to do it, it's not going to work either. So it's a dual effort, and everybody needs to push in that direction.
Fantastic. Yeah, no, I would agree with you both on that point. I do feel as though automakers are listening to sort of changing customer demands and looking ahead to what preferences will be in the coming decades. We've just invested in 2 companies recently in our portfolio, both in the sustainable materials space. One is called Generation Phoenix, and if you've flown here to Madrid, you've probably sat in an airplane seat that's covered in their material, because they're very big in aviation, but also now in the automotive sector.
I love their name.
Yeah, they were recently rebranded from E-Leather to Generation Phoenix.
The Generation Phoenix is much better.
Yeah. As I said, new generation preferences, it's hitting that point exactly. So I think there is definitely a shift in that direction, and Tesla was an early adopter. They went all vegan interiors in 2019, and I think that is listening to changing preferences in the market. But obviously, this material, it still has to have the quality and reach the standards of traditional animal leather, but with much better ESG credentials.
But I will say, kind of going to the consumer, auto companies are listening to the consumer, and the idea that we will have an EV panacea in our lifetime, I believe, is false. I think we're going to see a multitude of differentiated powertrains, of which ICE engines that all of us are using today, or majority of us are using today, will continue over the next many decades in the Americas and Europe, but in some geographies for a century. And so this is going to be, again, a transition. I think hydrogen is going to have a really important role to play. I think fuel cells will be interesting in certain use cases. But I think we need to be cognizant that this is going to be something where there's not one recipe to feed everyone. It's going to take many.
Yeah.
No, and I think it's really, nowadays it's not just about quality of products, as you're saying.
Yeah.
People and the young generations are really looking into the benefits and what's happening, and they really will buy something even if it has a little bit of a higher price, if it's well built and it's ecological and coming from a company that is thinking long term on the society rather than just making the bucks. So really, they're really looking into these things now.
Okay, and a question that might be quite controversial is, where does politics sit in ESG? Do you think there's any trade-offs that companies have to make in kind of the geopolitical turbulence that we're facing at the moment, where they might have to seek different suppliers, resources, depending on regions?
I mean, I think politics sits right in the center of ESG. But I think that for maybe a different reason than you expect. And so I think when we look across our governments, from both an executive and a cabinet position, but also ministries around all of the Western world, we have many individuals who are sitting in positions of power who have no background for the positions in which they sit.
Yeah.
And that is something that we must solve. We have to demand that the men and women who are sitting in positions like Secretary of Energy, like Secretary of Transportation, have a deep understanding of these sectors so as to push the type of growth that we require that's going to be there. There'll always be patronage in politics. It's part and parcel, but we have to demand excellence. And I think if we do that, then we will have ESG policies that are sustainable, that are profitable, and that actually represent our ideals as members of the West. If we don't do that, then I think we'll have much of the morass that we have right now, where there's not that much divide between the three of us, and we just met. I can guarantee that. But there's so much that's brought up that wastes time from getting to real solutions.
Yeah.
So I think it's a key part, unfortunately, but maybe fortunately if we get the right men and women in the job.
Yeah, and I think in addition to that, what happens many times is that they do not really think that changing and going more green or going more social is going to make them more money. And sometimes they just think about, the bottom line, which is money, and that's not the case. They really need to think about it, and if they're educated enough, they will understand that in the long run, this will help more, you'll make more money, and you will be better for society.
And more of a general question now, scene setting. What factors do you think will play a pivotal role in increasing the trend for VCs and private equity firms towards ESG credentials in the coming years?
Well, I would say, a lot has to do with the government. Again, going back to, for example, data centers, there are some countries now that would say, they take a lot of energy. So it's that if, a piece of your energy is not coming from green sources, then we will not provide you the permit. So the more the governments will push down this to everybody, the better that each one will do, and the more that we'll go into that direction. So I think it has to be a lot with policy.
I think it'll be another P. I think it'll be profit. I think PE and VC are going to chase where there's going to be the biggest returns. And I think what we have to do, when you think about places like Spain, when I think about places like Michigan, I want to make sure that the companies that are going to grow and move the world for the rest of our lives are founded by high integrity men and women from the places I love, and that are funded by men and women from the places I love. And so I think when you talk to folks on the coast of the United States, for example, there's a perception sometimes that they have all the answers. That is false. There's amazing men and women in every country in Europe. There's amazing men and women in every state in the US. We need to make sure we're empowering those entrepreneurial centers and letting them grow to create great product, and not let there be a huge divergence in wealth and prosperity based on entrepreneurial and investment in innovation industrial centers.
Okay. And in terms of Assembly Ventures, what ESG metrics do you apply when you're sourcing, doing due diligence on a deal, or even when you're working with portfolio companies? How can you work together with your portfolio to solve the problem together?
No, it's a great question. For us, people always ask me, or it sometimes comes up, are you an impact fund? And I was like, we are not. But every company we invest in will have real empirical impact. So I talked about Sortira. We have hundreds of millions of pounds of aluminum recycled coming into production in the North American market over the next couple of years, and some coming online right now. That is real impact in a way in which other companies that maybe are talking about future carbon mitigation can't go after. Companies like our Next Energy, looking at lithium as a core component of their overall battery chemistry system, getting away from rare earths. A large minority of cobalt is mined by children in the Congo. We shouldn't tolerate that. How do we actually get out of those ecosystems and get to more sustainable materials that we own in the West, and so on and so forth. And so for us, it's not that we are tracking an individual KPI for the sake of checking a box, but it's when I sit down with that entrepreneur and I say, why are you doing this? And they talk about this from the perspective of, yes, it's a great business. Yes, it has the ability to change core aspects of our industrial policy and how people move the world. But there's also this piece that really matters by way of environment or social construct or people's lives. And so we're looking at it very much holistically through that lens.
Okay. Manuel?
And we just like to think in in the cities or the communities that we invest in, not just worldwide. Because sometimes, if you do an investment in Switzerland or in the US and you're based in Amsterdam, you might not really care. So when we look at these investments, you look into really how many households are you going to be touching if you're doing programs on, smart cities or helping specific regions. Okay, what's going to be the impact? And people will really feel that. I mean, this is something that is going to change. Our family is going to be changed in a specific area where you're going to be doing this investment. And I'm not saying that you should not think, globally, but also you really need to think locally. So if you invest in these places and you feel these people, they're getting better wages, they're doing clean jobs, people is excited about coming to work because they're doing something better, then I think you're going in the right direction, and that's the right company to invest in, because you really, really are touching. And you can feel it, what's happening, next to the company, next door, really.
And lastly, final question. We've whittled through those questions. What excites you the most about sort of the changing ESG landscape in the venture capital world?
I mean, I think it's a chance to do well and do good. And there's a misconception still amongst some individuals who are in just pure finance that you can't do both. And I would completely disagree with that. I think the point you made earlier, as it relates to, you have to take the long view. You have to think about this from the perspective of, this is what we're going to be able to do today, but the second and third order effects, which we can actually ascribe value to, and not value that's just fictional, but that we can underwrite and find new ways to actually bring back to the individuals involved. That is something that's a step change, and that will change the way people invest from large corporates to middle market PE to VC. But for us, again, I think the most important thing is finding co-investors that share your philosophy around, it's not just, for us, it's not just air, land, sea, and space. We want to invest in great entrepreneurs that are moving all those realms. But where are we moving to? What are the underlying philosophies? What's the underlying values that we share in the West? That's very important to us.
Yeah, and I think, let's just put it in very simple terms. If you're going to be investing in something that will be good not just for you, but for the next generation, for your children, or even your grandchildren, then it's simple. And I mean, not all the companies will last that long, but if you think that way and you think you're going to be doing something good for them, and you're going to, provide a better world for them, and water will be cleaner and the earth will be better, then just that's a simple way to think about where to invest and just think on a long-term basis.